Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
So maybe transition a little bit, Sydney. Let's talk about cash flows and what does that conversation look like?
Yep. So on the other side of the expenses, there's got to be some type of inflow happening in order to support your lifestyle and support those expenses. There's lots of different things that can be used for cash flow in retirement. You'll hear us talk about things like NUA as a potential strategy, especially for those early retirees. And then when we're talking about retirement pre-59 and a half, when you can tap into those pre-tax assets, you have to bridge that gap. There's something that has to fill that space.
Well, hold on, let's explain what that means a little bit more. The reason that we're saying this bridging of the gap is retirement accounts in almost all instances cannot be touched before the age of 59 and a half without a 10% penalty. So there's a gap that if we want to go at 55 and we need to get to 59 and a half, we need to have a very, let's just say, deliberate conversation around cash flow planning for that period of time. And not saying it can't be done, right? But this is part of where the early set of planning is so important, because retirement accounts we can't touch until 59 and a half. But non-retirement accounts, we can. There's no age restriction on touching a brokerage account or a savings account, et cetera. So for any of the households that we're working with that have the goal of being able to retire prior to 59 and a half, we have to have this additional conversation around what are we doing to fund their income and cash flow needs from the age of retirement up to the age of 59 and a half. And that might mean that we need to have a new goal of saving in after-tax accounts as early as we possibly can to start building that up, because that's going to be the first place when we talk about generating this income and cash flow. It's what do we have in after-tax accounts? And then we can ladder in things like
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.